Hey everyone, welcome back to the Dinar Daily. We are tracking a significant and developing story that is capturing widespread attention across financial communities. Reports are circulating with immense velocity this morning, claiming that a new exchange rate for the Iraqi dinar has not only been established, but has gone fully live on global systems. The narrative accompanying these reports is emphatic, asserting that this is not speculation, rumor, or a future projection, but rather a tangible, real-time event. This information suggests that the currency's data is now visible and public, moving beyond the confines of private bank test screens and appearing on global currency registries, signaling a potentially historic shift in its standing. The core of this development, as presented in the information we are analyzing, is that the period of testing and preparation has concluded, and the dinar has now entered a phase of active, public trading on a global scale. According to the details emerging, the activation was first noted in the early morning hours, when global forex tracking systems began to register unusual activity originating from Iraq's currency registry. This followed a prolonged period of relative stillness. The transcript of events suggests that this initial data flicker rapidly evolved, with activity reportedly appearing across multiple, distinct financial networks. This electronic footprint was then allegedly followed by confirmations from several Baghdad-based news outlets, which reported that the Central Bank of Iraq had officially activated the new rate. This sequence of events, from digital signals on global systems to local media confirmation, is being presented as a clear and definitive confirmation that the dinar's status has fundamentally changed from a static, managed currency to one that is now active on the world stage. This narrative is being forcefully distinguished from previous cycles of rumor and speculation. The reports we are examining make a strong point to differentiate this event from what they describe as coming soon headlines or unverified insider claims. The emphasis is placed squarely on the public visibility of the data. The claim is that traders, investors, and potentially the general public can now see this information on the same global systems used for daily trading of all major world currencies. This assertion of transparency is key to the entire story. It posits that the dinar is no longer in a testing mode or a simulation but is now fully public, fully visible, and fully active. This represents, in the context of the report, the final step in a long-awaited process, moving the discussion from the theoretical to the practical. Of course, the central question arising from these reports is the specific value being cited for this new, active exchange rate. The information provided states that multiple live data feeds are showing a dynamic range, with reported values fluctuating between approximately $3.42, $3.42, and $3.95, $3.95 per single dinar. The transcript notes that this variation depends on which specific trading platform is being observed. Far from being a glitch, this reported fluctuation is being interpreted as the primary evidence that the currency is genuinely in an open market environment. The argument presented is that this live movement, reacting to market forces just as any active currency does upon its debut, is what proves its authenticity and distinguishes it from a simple, static placeholder value. Further supporting this narrative, the transcript points to developments within the United States banking sector. It specifically alleges that several major U.S. financial institutions, including names like Chase, Wells Fargo, and TD Bank, temporarily paused their public-facing foreign currency exchange portals earlier today. This action is not framed as a problem, but rather as a normal step and procedural necessity. The interpretation offered is that such pauses are standard practice when back-end systems are being updated with significant new rate information. These reported pauses at major international banks are thus being woven into the larger narrative as corroborating evidence that a genuine, systemic update related to Iraq's currency is actively in progress across the global financial system. The transcript expands beyond the immediate financial data, framing this alleged event as a moment of profound national significance for Iraq. It presents this as the culmination of a long journey to rebuild the country's financial identity. The reports reference the decades of economic struggle Iraq has faced, citing the impacts of war, systemic corruption, and a heavy dependency on oil revenues as factors that have historically weakened the dinar and caused frustration for its citizens. This alleged rate change is therefore portrayed not merely as a technical adjustment, but as a symbolic milestone, representing a country's effort to stabilize its economy and reclaim its standing. The narrative suggests this is the payoff for years of foundational work that has been happening quietly behind the scenes. Elaborating on this preparatory work, the transcript details several key reforms Iraq has reportedly undertaken to reach this point. It mentions the passage of the hydrocarbon law, describing it as a mechanism to distribute the nation's vast oil wealth more equitably among its different regions and citizens. It also highlights the modernization of Iraq's payment systems, pointing to the implementation of digital banking capabilities and mobile transaction platforms. Furthermore, the report emphasizes Iraq's efforts to strengthen its relationships with international financial organizations, asserting that the country has made significant commitments to transparency and structural reform. All these underlying efforts are presented as the necessary groundwork that has now enabled the global recognition and activation of a stronger national currency. The timeline of events presented in the transcript suggests a rapid escalation. According to this information, preliminary signs began to surface just last night. These included what were described as data refreshes and pings detected across Middle Eastern foreign exchange data lines, hinting at imminent activity. This was reportedly followed by news of urgent, high-level meetings being convened at the Central Bank of Iraq's headquarters in Baghdad. This sequence of late-night digital signals and official meetings allegedly set the stage for the main event, which unfolded at dawn, when the new numbers began to populate financial screens worldwide. This detailed minute-by-minute narrative is constructed to give a sense of a deliberate and coordinated rollout. An interesting parallel claim included in the report involves Vietnam's currency, the dong. The transcript alleges that at nearly the same time the Iraqi dinar began showing its new, high values, the Vietnamese dong also registered slight upward movement. This observation is linked to a broader analytical theory, with the report claiming that many analysts believe Iraq and Vietnam are connected within the same global financial reform initiative. This initiative is described as one backed by real-world, tangible assets such as oil, energy, and other natural resources. The implication drawn in the transcript is that if the dinar has indeed entered this new phase, it is likely that Vietnam's currency may be the next to follow in a similar pattern, suggesting a coordinated, multinational shift. The reports also detail what is allegedly happening inside financial institutions, particularly in the United States, following the appearance of the new rate. The transcript claims that banks across the country have begun conducting internal system checks. It goes on to state that many bank branches have received internal notifications, which confirm that the new, higher rate is live and visible in their back-end systems. Even though it is not yet available for public exchange at the customer-facing level, this distinction between a live back-end rate and a not-yet public retail rate is a crucial element of the narrative, suggesting the rollout is in a transitional phase. This transitional period is described in the transcript as a normal and expected part of the rollout. The information suggests this phase is necessary for banks to complete their due diligence before opening public exchanges. This process involves confirming the accuracy of the new rate data, ensuring all compliance and regulatory requirements are met, and, crucially, verifying sufficient liquidity to handle the anticipated demand for exchanges. During this brief integration period, the report notes that bank websites or currency portals might display messages like "service unavailable" or "rate updating." The transcript explicitly frames these messages not as errors or problems, but as positive confirmation that the integration of the new rate is happening in real time. Adding significant weight to the narrative, the transcript asserts that official statements have been made by Iraqi leadership. It claims that hours after the rate went live, Iraq's prime minister delivered an address on national television. While the report notes he did not use the specific word, revaluation, his statement is quoted as being powerful and direct. "Our people have waited patiently for a currency that reflects the true strength of Iraq's economy. That time has come." This quote is presented as a clear signal of confidence and a definitive shift in national policy. This alleged statement from the highest level of government is positioned as the political confirmation of the technical data seen on forex screens. Immediately following the Prime Minister's reported address, the Central Bank of Iraq allegedly issued its own brief announcement. According to the transcript, the central bank stated that the updated exchange rate would serve to strengthen Iraq's global position and provide crucial support for the growth of the private sector within the country. The transcript emphasizes the importance of these near-simultaneous communications. The fact that both the head of government and the independent central bank reportedly spoke within hours of the rate shift is interpreted as a clear sign that the move is intentional, official, and of historic importance, rather than an accidental market fluctuation or a technical glitch. The global reaction to these alleged developments is characterized in the transcript as cautious but optimistic. It makes a specific point that the global markets did not panic. There was reportedly no crash in financial indices or a sudden negative drop in oil prices. Instead, the narrative suggests that financial analysts and experts have begun to recalibrate their view of Iraq's economic potential. The country's position as one of the world's largest holders of oil reserves, now supposedly paired with a modernized currency and financial system, is said to be opening up new discussions about investment and growth. This calm, analytical reaction is presented as further validation of the move's legitimacy. The transcript also introduces a broader geopolitical theory, suggesting that some experts believe this event marks the beginning of what they term the Middle East monetary realignment. This concept is described as a coordinated effort among regional economies to establish stronger, more stable currencies that are explicitly backed by tangible assets like their vast energy reserves. Whether this specific phrase gains traction or not, the report asserts that Iraq's alleged move has fundamentally changed the game. It's portrayed as a significant, unilateral step that could have ripple effects across the entire region, potentially prompting other nations to follow suit in reforming their own monetary systems. For individuals outside of Iraq who may be monitoring these developments, the transcript relays several points of caution that are reportedly being emphasized. The advice described is to stay alert and informed, but not to rush or panic. It mentions the importance of keeping all documentation and receipts for any currency holdings safe and secure. The report also highlights strong warnings against posting sensitive details, such as note serial numbers, online. A significant point of emphasis is the warning to avoid any third parties or individuals claiming to offer early access or private exchanges, stressing that the legitimate process will only occur through regulated and verified banking institutions. Looking ahead, the transcript lays out a sequence of expected events for the coming hours and days. The first step, which is described as currently in progress, is for banks worldwide to complete the process of syncing their internal systems with the new, live rate. Following this technical synchronization, the report suggests that official confirmation notices will begin to appear publicly from the banks themselves. Once this happens, the Central Bank of Iraq is expected to release comprehensive and full rate tables for global markets. Only after these official steps are completed, the narrative explains, will public exchanges begin to open, rolling out in a phased, step-by-step manner, country by country. The report repeatedly circles back to the impact of this alleged change on the Iraqi people themselves, framing them as the biggest winners. The transcript paints a picture of hope, suggesting this financial shift could lead to price stabilization for everyday goods. It posits that imported items, which have been prohibitively expensive, may become more affordable, allowing the average citizen to finally feel a tangible value in the money they earn and use. This is contrasted with the years of inflation, economic instability, and currency manipulation that the report says they have endured. This change is therefore framed as the dawn of a stronger financial future for millions of Iraqis. This theme of national restoration is a dominant thread throughout the transcript. The narrative argues that this event is not merely about financial traders or international investors. It is fundamentally about national dignity and global respect. The establishment of a fair, stable, and strong exchange rate is presented as a powerful signal that Iraq is successfully reclaiming its place in the world economy. The report elevates the event beyond pure economics, describing it as a potent symbol of rebirth for a nation that has weathered immense challenges. The new currency rate is thus equated with a new chapter of national pride and restored potential. The transcript also addresses the question of why this process has taken so long, offering a specific explanation. The answer, according to the report, is the time-consuming nature of rebuilding trust. It argues that the strength of a currency is not simply printed on paper, but is built on a foundation of global confidence. To achieve this, Iraq reportedly had to undertake the difficult work of addressing internal corruption, strengthening its vital oil sector, attracting new international investors, and building a reliable and transparent financial system from the ground up. Every audit reform and law passed over the last several years is positioned as a necessary component in preparing for this exact moment. This explanation is used to further differentiate the current claims from past speculation. The narrative insists that this feels different because it is not based on hype or rumor, but is the result of years of real reform. The transcript frames this as an achievement that Iraq had to earn through diligent structural changes. This long, arduous process of internal reform is presented as the reason why the current development is credible and sustainable. The implication is that the foundation has been properly laid, allowing for a genuine and lasting change in the currency's valuation, rather than a temporary, artificially inflated spike. Despite the overwhelmingly positive tone of the reports, the transcript does acknowledge that such major transitions always involve risks. It notes that some computer systems may take longer than others to update, potentially causing synchronization issues. It also allows for the possibility that some traders might overreact in the short term, and that not every global exchange will move at the same speed. However, these potential issues are dismissed as normal parts of any large-scale financial update. The key takeaway message being relayed is the importance of patience, allowing these normal logistical hurdles to be cleared without panic. For everyday people, the transcript reiterates a strong message of caution against opportunistic scams. It emphasizes that the safest course of action is to wait for official updates directly from established banks. The report explicitly warns against engaging in quick swap deals or using unofficial middlemen. It provides a clear instruction to never hand over currency without unambiguous verification from a legitimate, regulated financial institution. The transcript observes that moments of significant financial change often attract scammers quickly, and the best defense is to stay calm, stay smart, and deal only with banks that publicly confirm their participation in the exchange process. The transcript also sets realistic expectations for those outside Iraq. It clarifies that a public rate appearing on forex screens does not mean that every bank worldwide will begin cashing in the currency immediately. Institutions, it explains, have their own internal protocols. They will need to independently confirm liquidity, ensure they are in compliance with all international financial laws, and activate their own verification systems before they can begin processing public transactions. The report also notes that some banks may not trade in Iraqi dinar at all as a matter of policy. Therefore, it may take time for the global retail infrastructure to fully catch up to the new rate allegedly appearing on wholesale professional screens. Even with these cautions, the transcript concludes that a fundamental change has occurred. The message is that the door that was once closed is now open, and Iraq's currency is, according to these reports, officially back on the global stage. This alleged change is predicted to open the floodgates for a host of new economic opportunities. The report speculates that this could lead to a return of international investors, an expansion of oil partnerships, and a sharp rise in new investments across construction, trade, and technology sectors inside Iraq. This influx of capital, in turn, would lead to more jobs and a path toward economic independence. This narrative of renewed economic potential is central to the report's conclusion. It argues that a strong currency inherently brings confidence, and that confidence is the primary driver that attracts sustainable growth. This, the transcript claims, is the true power of this moment. It's presented as an event that transcends mere exchange rates and is fundamentally about rewriting Iraq's economic story. The implication is that the country is moving from a story of instability and recovery to one of potential, growth, and integration with the global economy, all anchored by this single transformative financial event. The transcript also positions these events within a wider global context, suggesting they are a reminder of how rapidly global markets are shifting. It points to what it describes as a rise of asset-backed currencies, a move toward modern digital payment networks, and increasing regional financial cooperation. Iraq's alleged move is thus presented as a potential catalyst that could inspire similar reforms in neighboring countries or other nations that have also been seeking monetary stability. The report theorizes that what is happening now might be the very beginning of a much wider regional transformation, one that seeks to balance traditional wealth from natural resources with modern, stable financial systems. Ultimately, the transcript brings the focus back to the human element. It endeavors to translate the abstract financial data into tangible human impact. It evokes the image of a worker in Basra who might now afford imported goods without inflation eroding their income, or a business owner in Baghdad who can now trade internationally with new confidence. It also mentions a young economic student in Iraq who can, perhaps for the first time, see their own country's currency listed on live forex screens alongside the world's major economies. This is the meaning the report ascribes to the event. Pride restored. Potential unlocked. A nation standing tall again. In its final summary, the report forcefully reiterates its central claim that Iraq's new exchange rate is not a theory anymore, but is visible, live, and active. The narrative is that the systems are currently sinking. Banks are preparing for the public rollout, and the world is watching. It portrays this as a moment of history unfolding in real time. The concluding message is a call to follow verified information, watch official channels, and remain patient as the story continues to develop, hour by hour. It frames this as the definitive start of a new chapter for Iraq, one that has finally captured the world's attention.